Felix and Winston here, and there are nearly 1 billion square feet of empty office space in the US. If you put that into an office tower, that would be 48,000 floors. Yeah, 48,000 floors. And we are expecting 5 to 10 office towers to default every month, yet nobody's talking about the real estate crisis that we're in the US. New York alone has 76 million square feet of empty office space, and it sounds like a meaningless number, doesn't it? But if you imagine that, put them on top of each other, it would go up 7 miles. Crazy, hey? So before we go into what this actually means for your stocks and your portfolio, you deserve to know how Wall Street actually trades with 85% probabilities, what I learned as a hedge fund strategist, and I'm giving away my strategy tomorrow. Not only do I give you the full strategy and a workbook, but we also will do some live trading together so you can see it implemented into practice. All you're going to do for that is go to felixfriends.org/webinar, sign up for the free training, and join me tomorrow. It'll be a blast. Now, where is it worse in the US? Well, San Francisco, vacancy rate is 26%. Before COVID, it was 4%. 4 to 26% is a pretty cataclysmic increase in vacancies. Salesforce, for example, walked away from a 30-story tower in San Francisco to cut cost. And I put a chart on here with the cities and all the vacancy rates, and you can see every major US city has essentially a huge vacancy problem. Now, the trend is pretty clear, and this is not one that's going to go away. Huge offices are dying, they're disappearing. Co-working spaces are collapsing. Look at this chart up here. Tech and media companies are cutting waste. And what happens then? Well, for food and beverage companies, restaurants, sandwich shops, that sort of thing, they also die with it because less people come to the cities. But the real concern, honestly, is that the lower value in office space, and I would say that it's about 35% drop in value, is going to lead to a huge pile of distressed assets. And who holds a lot of these distressed assets? Winston says, don't tell me, the news is just too bad. Well, banks do. Now, the Fed, in its sheer, wisdom, did a stress test, and they tested what happens if these office values fell like 40%. They say, okay, 68 billion loss for big banks. They can kind of handle that. But what they didn't check was, what about the small banks? Because the small and regional banks hold 80% of this garbage. And no, they cannot weather the storm because they are already on the brink of collapse, bank runs, default. So the situation gets more serious as Winston finds something to sniff at. And have a look at this little bit of number here. If you look at the leasing activity, apologize for covering up Winston there. If you look at the leasing activity pre-COVID in sort of brownish and then post-COVID in blue, you can see we never recovered. The recovery has not materialized, and I don't think it will, because people don't want to go back to the office. Co-working spaces sucks. Have you been in one? They're typically fairly soulless things, and you think, well, I'm sitting here with a laptop, drinking something I didn't want to drink out of a plastic cup. I could do this from home, right? If this cost me money, I could just rent a nicer place, could move to the country, and then I could sit in the garden or in a park here like we are. So the real impact, as I say, is on banks, and the 10 to 250 billion banks. This is sort of the regional banks, the mid-sized banks. They are the ones with the biggest portfolio of this stuff. They hold 30% of, am I right on that? No, 1 to 10 billion, I'll put it on the screen here as well, holds 32%. 100 million to 1 billion owns 27%. So those two groups, the mid-sized banks, pretty much hold all of this toxic rubbish. And what does it mean? Well, you could say, well, let's bet against BlackRock or somebody like that, one of the big REITs. But I kind of wouldn't, because A, those guys have spent decades making sure that they are deeper inside the Washington morass than everybody else and anybody else ever has. And they've already set up a new fund where they raised money to buy the distressed debt and the distressed assets. So what they're doing is they're defaulting. Literally, BlackRock is defaulting on office buildings, not paying, what it was originally worth back to the bank, just walking away from it and then going, yeah, but we're going to buy it back from you at a fraction of the cost, and then we're going to make money out of that. How are they going to make money out of that? What's the silver lining here? Well, I think residential conversions is going to be a big thing. And I think in the long term, this will probably take 10, 20 years. It could actually make inner cities really livable again because we've got too many offices and not enough people living in them. And if it's reasonably affordable and nicely done and beautiful views and green spaces and everything else, people might actually enjoy being back in cities. But first of all, cities have got to be safe. And that's obviously a big problem because cities rely on tax revenue. All the offices are empty. They're not getting any tax revenue. No one's building anything. They're not getting any residential and not any, real estate taxes essentially, or selling land or anything like that. And therefore, they're struggling to pay for police and security. And of course, lots of, political minefields that we could step into with that stuff. But at the moment, this is bad. It's going to get worse. But what are the wealthy doing? Well, the wealthy are buying property in cash because they don't want to pay the high interest rates. So instead, they're just paying in cash. In New York City, 70% of residential transactions are paid in cash. And it just goes to show that those who have a lot, and they have assets. And if you don't have assets, if you don't have property, if you don't have a big stock portfolio, you need to catch up. It's the only way to get you there. The only people who are going to have a nice life the next 50 years will be those with lots of assets, lots of income streams that pay them money. It will not be the salaried employee. In my view, he's fairly doomed. Now, on a more cheerful note, Winston's having a nice day. I'm in a beautiful park. It's a little windy, but it's a beautiful day nevertheless. Sign up to the webinar, guys, and at least you can learn how the market actually works and how you could potentially build an extra income stream the way we do. And subscribe to the channel if you want to stay up to date with what's really going on, not just the headline nonsense, but what is actually going on the deeper level here in the market. Thanks for watching.